Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Decoding Structured Warrants, Risks and Rewards. My name is Shane Chu. I'm the moderator for this session. So in this webinar, we're going to explore how do you include structured warrants as part of your portfolio diversification strategy. Now, before we begin, disclaimer. Whatever we share in this session is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you are solely responsible for all your investment risk. All right, so today we are very honored to invite a senior analyst from Maybank Investment Bank to join us in this session to give his view about how do we incorporate structured warrants as part of the portfolio diversification strategy. So our speaker started off in the banking industry as a management associate, covering departments such as corporate banking, group strategy, and asset management. Currently, he's a senior analyst in the equity commodity derivatives division of Maybank Investment Bank, which is the leading issuer of structured products and structured warrants in Malaysia. Notably, he has conducted more than 20 webinars and seminars with over 1,500 clients, even with only 2 years of financial market experience. So on top of that, he's a core content curator for Maybank IB's Telegram channel, Trade with Maybank, catering to the readership of more than 22,000 subscribers. He's passionate about the market and has a zeal to educate investors. So he holds a Bachelor in International Business from Help University. He's licensed by Securities Commission Malaysia as a capital market services representative for both equities and derivatives dealing. So it's none other than Mr. Tucker Cheah. Tucker, how are you today? Good to see you here.
Thank you very much, Shane. It's good to see you again. I've been doing quite well. I think the KLCI is also not too bad for the year-to-date performance, right?
Yep. Good to know that. All right, so I'll just stop sharing my screen and hand over the control to you to share with us how do you use structured warrants as part of portfolio diversification strategy.
All right. So just give me a moment. Let me just quickly share my screen. Can anyone see my screen?
Yes, perfect.
Okay, great. Thank you very much, Shane. So just a quick reintroduction again of myself. My name is Tucker. So this is my second time collaborating with LifeChamp this year to provide educational content about structured warrants. So before we actually begin into today's session, I would like to just go through a few order of business that I'll be covering. So number one, of course, it is the regulations governing structured warrants. I think a lot of us are not familiar with who actually regulates structured warrants in Malaysia, as well as the underlying reference asset available to be issued over as a structured warrants. And of course, lastly, the two topics I'd like to cover is actually how do you select a warrant and also the tools available for you at your disposal as a retail investor in the market. All right. So let's just start off with the two main regulatory bodies here in Malaysia. So before we dive into the technical aspects of structured warrants, it is always essential for us as retail investors to really understand the regulatory framework that ensures these instruments, these financial instrument tools such as structured warrants, are safe for both issuers and investors. And of course, in Malaysia, there are actually two key regulatory bodies who are responsible for overseeing structured warrants. Namely, we have the Securities Commission as well as Bursa Malaysia. And each of these entities plays a distinct, but of course, a complementary role in maintaining market integrity. Okay, so let's just quickly jump into Securities Commission first. And of course, as a Securities Commission, SC, they set out guidelines for issuers' eligibility. So this is their first responsibility as a Securities Commission, is to set the guidelines for issuers to know who are eligible to be an issuer of structured warrants. So these guidelines actually dictate who can and cannot issue structured warrants. This is because as an issuer, we have to meet stringent financial and operational criteria to ensure that we are capable of fulfilling our obligation to the investors in the market. So a quick example is actually an issuer must have a good and strong financial standing, which provides assurance to the investors, to the market, that the issuer or the investment bank is actually capable of managing the risks associated with issuing structured warrants. And of course, this will reduce the likelihood of default And this overall, it enhances market stability. And of course, number two, apart from setting out the guidelines for the eligibility, and of course, this will actually set the guidelines for the documents to be prepared. So this is actually another key role of the Securities Commission in ensuring that issuers provide accurate and comprehensive disclosure documents to the retail investors, right? So the SE here sets the guidelines for documents such as prospectuses, which gives investors a clear understanding of the structured warrants terms and conditions, for example. And within this documentation or this base prospectus, which we call BP in short, is that it must detail essential aspects such as the terms or what can we as issuer issue structured warrants, such as whether is it cash collateralized, European style, American style, or over which type of underlying reference asset. So within the BP as well, the potential risks involved with trading structured warrants are also specified. So the goal here by SC is essentially to create transparency between us as an issuer and also to allow investors to make informed decisions. And of course, thirdly, it is to regulate the suitability of structured warrants issuer. So Securities Commission primary purpose of these regulations that they set out or these guidelines that they set out is to ensure that every issuer in the market is suitable to be an issuer. So through filtering all these criteria, either through guidelines or through regulation, these rules can set out a clear disclosure to all the issuers or potential issuers who wants to issue structured warrants in the market, a clear framework of how they can become an issuer in the market. This is because Securities Commission, the SC, aims to protect investors from unnecessary risks and maintain a level playing field between the issuer and the investor. So overall, this level of oversight by the SC actually helps to boost investors' confidence in the market as they are able to trust the products that they invest in are backed by credible and transparent issuers. And of course, we have Bursa Malaysia. So right off the bat is that Bursa Malaysia actually sets out the requirement for listing structured warrants. So what listing requirement is this? Is because that the SC focuses on the eligibility of the issuers, whereas Bursa Malaysia focuses on the requirement for listing structured warrants. So this means that before any structured warrants can be offered on the exchange, it must meet certain criteria set by Bursa. So for example, this year, the market cap requirement has been reduced from 1 billion to 500 million for 3 consecutive months. So that's one of the criteria, for example. So these criteria or requirements ensure that structured warrants that are traded on the market are suitable for investors and adhere to specific standards, criteria, and requirement, of course. So this helps to prevent the listing of low liquidity or low quality or maybe even high risk sort of underlying, for example, that could undermine the market's credibility. And second is the requirement to make announcement. I'm not sure if everyone here present today is actually aware that Bursa Malaysia mandates that all issuers in the market to make timely announcement regarding key developments. This could include announcement regarding new structured warrants, corporate actions affecting the underlying asset, or even significant market events. So the reason for these announcements is actually the public disclosure helps to maintain transparency in the market, keeping you as an investor updated on any changes that could affect your holding of the structured warrants or even your investment decisions. So being transparent is very important. Hence, the transparency here is very critical, especially for instruments like structured warrants, which can be complex and sensitive to market movements. And lastly, of course, Bursa Malaysia sets out the requirement for market maker presence in the market. So this is actually an essential part of Bursa's role in ensuring the presence of market makers during market hours. This is because, remember, market makers plays a pivotal role in maintaining the liquidity for a structured warrant that they issue. So this always ensures that there is a buyer and a seller at a fair price. So this is why issuers in the market, they have to maintain roughly 80% of their presence in the market during the market hours. All right. So this is because without market makers, right, investors like you could face difficulties in selling or buying the structured warrants, especially during volatile markets. So the role of the market maker here, the key role of the market maker here is to actually quote a buy or sell prices continuously during market hours to ensure investors like yourself can enter and exit positions as needed. So this form of system or this form of market making is to ensure that liquidity is provided in the market for an efficient functioning of the structured warrants market. Because, for example, if you were to buy a structured warrant and you are unable to exit, right? Or if you see that the underlying share has been moving, but you are unable to buy the structured warrants that you want, this does not provide you the opportunity to use structured warrants as a financial instrument tool. So this actually ensures that the prices remain fair, the market maker maintains their presence, and investors have access to trading opportunities at all times. So to quickly summarize this slide is that both Securities Commission and Bursa Malaysia actually work in tandem to ensure that the structured warrants market is well regulated, transparent, and efficient. So just to remember, the Securities Commission, the SC, focuses on eligibility and transparency, making sure issuers like Maybank are capable and trustworthy, whereas Bursa Malaysia handles the listing process, public announcement, and also market makers' presence in the market. So this framework, this regulatory framework is designed to actually protect investors while fostering a well-functioning market, providing yourself as a retail investor opportunities to benefit from structured warrants and also from the market. So going on to the next slide is actually investors' protection. I'm not sure if you are aware that as part of any important aspect of any financial market is to ensure that investors have access to proper channels for dispute resolution. And in Malaysia, we have a body that is called Securities Industry Dispute Resolution Center, or in short, SITREC. So SITREC actually plays a very crucial role in protecting investors when issues arise in the capital markets, particularly as well in the cases involving structured warrants. So what is SITREC's role here? So SITREC's role here is actually an independent body that handles capital market disputes, specifically focusing on those that involves monetary loss. And SITREC provides a fair and impartial platform for disputes between individuals or sole proprietors between SITREC members who are typically financial institutions and capital market intermediaries. So SITREC uses their expert knowledge and experience in the capital markets. So SITREC offers specialized dispute resolution services to ensure that investors receive professional and knowledgeable assistance tailored to the complexity of the financial market. And of course, for investors, one of the biggest advantages that SITREC can offer is that it is free for claims up to 250,000 under its mandatory scheme. So this means that any individual investor who suffered from a monetary loss up to this amount of 250,000 can access SITREC without additional cost. All right. Whereas for claims above 250,000, however, SITREC actually provides an alternative via its voluntary scheme. This scheme allows disputes to be addressed if both parties, meaning the individual and SITREC members, agree to use SITREC's services. While for the voluntary one is for larger claims, it remains as an accessible and efficient option for retail investors seeking impartial resolution. So why is SITREC here important is because SITREC provides a key layer for investors' protection, of course, as it ensures that when dispute arises between yourself as a retail investor with a SITREC member, especially involving monetary loss, retail investors actually have access to a trusted independent body to resolve their issues regarding the monetary loss. And this is also important in the structured warrants market, where disputes either over pricing, execution, or even issuer practices may occur. So sit right here actually helps to maintain your confidence, the investor's confidence, by providing a transparent avenue to resolve such conflict without needing to resort for lengthy or costly legal proceedings, right? So in summary for this slide is that SITREC is actually a very valuable body or institution for investor protection here in Malaysia's capital market. Given its expertise in dispute resolution, it can offer a peace of mind for retail investors, ensuring they have access to fair and impartial resolutions, especially when financial loss is involved. So this actually aligns with the broader regulatory goals of maintaining market integrity and protecting, of course, the retail investors in the structured warrants market. I'm not sure if you managed to catch it as well early on during when Shane was sharing the video. It is also part of Bursa's goals as well. So I've covered the two main regulatory bodies as well as a key institution in providing protection for the investors. So now, how do you actually search for information on the website or online or on Google? So you don't have to Google it, because Bursa Malaysia actually has this information counter for structured warrants. And this is because to make informed decisions when trading structured warrants, one is that you need to have access to reliable and up-to-date information. And this is very essential because information in this current era is oil, basically. So Bursa Malaysia actually provides an online information counter that serves as a comprehensive, holistic resource for structured warrants. So over here, you can see that there is the screenshot of Bursa Malaysia website. And I've highlighted over here, this is the structured warrants announcement. Okay, so you may go to the Bursa website later on and you can click on structured warrants. And one thing I would just like to highlight is that this page over here actually acts as a centralized hub for all official announcement related to structured warrants in regards to listings, in regards to expiry notices, and also other relevant information as well. So just to quickly name a few key features of this announcement page is number one, of course, announcement and updates. So the Bursa Malaysia website provides regular updates on structured warrants, ensuring that investors like yourself are always informed about important changes. This can include the new listing, the new issuance, changes in terms of the underlying assets, whether is it amendments to the exercise price or even amendment to the exercise ratio. So this also could be due to adjustments due to corporate actions such as bonus issue. For example, Gamuda will be doing a 1-to-1, right? And also to really emphasize is that these announcements are actually very crucial for investors to stay ahead of the curve, right? Particularly in understanding how external factors may affect your structured warrant holding, whether is it the corporate action, whether is it an extraordinary dividend. And of course, there is also the availability of a search and filter tool on this structured warrants announcement page. This allows you to look up for the latest term sheets of every respective issuer structured warrants in the market, and also the final settlement details, because every issuer in the market, how they calculate the cash settlement amount is different. So for example, like Maybank IB, we actually take the 5 days volume weighted average price, but other issuers may not do so. So to fully understand how is the cash settlement amount calculated when the warrant that you hold expires in the money, this is the best way to find out how the cash settlement amount is actually calculated. And of course, the expiry of structured warrants in the market. And why is this important? Because from very on the start of this webinar is that the transparency between the issuer and the retail investors. Because the most important feature of this page is actually the transparency by issuer, because we are mandated by the regulatory bodies to make the necessary announcement on Bursa Malaysia website. So this is essential for all investors when making decisions in a fast-moving environment, right? Especially when the market is quite volatile. So all this accurate data ensures that market participants have equal access to information, reducing the risk of information asymmetry. So this ensures that between issuer and investors, data is accurate and access to those information are also the same. So this transparency actually helps investors to better understand the risks and rewards associated with structured warrants by providing them with comprehensive background information. Just like any story that you want to know, context is very important, right? So with the comprehensive background information that you can get from this website, you are able to stay ahead of the curve. So to wrap it up in this slide is actually this information counter, or officially the structured warrants announcement page on Bursa Malaysia website, is an invaluable tool for both novice beginners and as well as seasoned investors, because it is a centralized, reliable platform for tracking announcement related to structured warrants. And this, of course, helps you to stay informed about anything related to structured warrants. So by utilizing this resource, which is completely free, right, investors can actually enhance their ability to make well-informed decisions, reducing the potential risks and also improve their overall trading strategies. Okay, so we are all in the market trying to find an edge, right? So with this tool, you are able to, search for the new warrants that's going to be issued by the investors, by the issuers. You'll also be able to find for the expiry notices. So for example, if a warrant is going to expire in the month of November, in October, we will do the announcement on this website already. Okay. So over here, this is the screenshot of the page. Once you click into the announcement, right? Structured warrants announcement here, you can see the announcement, all right? And you can select based on the warrant itself. So once again, to really effectively trade structured warrants is that investors need to have timely and detailed information. So Bursa's Malaysia structured warrants announcement page is exactly that. It provides you a comprehensive platform to track key updates and data. So just to quickly break it down for you, what are the 7 key announcement is over here, right? So I'll go through one by one from left to right, row by row. So of course, number 1 is actually the structured warrants announcement, which is the initial offering. So what is this announcement? So this announcement basically tells you when a new structured warrant is issued. This initial offering announcement provides all the critical details that an investor needs to know. So this can include information such as the underlying asset, the exercise price, the exercise expiry date, and of course the exercise ratio as well. So this announcement serves as the first and formal disclosure to the public, to the market, right? It is essential for investors to actually review this initial offering announcement before deciding whether or not to participate using the structured warrant itself. And of course, number 2 is listing information and the profile for structured warrants. So once a structured warrant is soon to be listed, the listing information becomes available. This contains an even more detailed profile for each warrant, which is the issuer, the type of the warrant, whether is it a call or put, and any other specific terms and condition that you need to be aware of. And this section, specifically this second section, it helps you as an investor to assess the warrant's suitability based on your trading strategies, your trading pattern, and of course, your view on the market. And number 3, that for every warrant out there in the market, there's actually an unique term sheet to it. So this term sheet is actually a very critical document available on this announcement website, is because it provides a comprehensive overview of the structured warrant. Okay, the structured warrant meaning, for example, if it's Gamuda C2M, it will be just for Gamuda C2M. So this includes all the other key features, even the ratio, exercise price, underlying assets, and all the other important terms. So whenever we do get calls from investors is that we always tell them to, hey, have a look at our term sheet first. This is because we would want the investors to review the term sheet before entering into a trade, because it outlines the potential risks and rewards. This helps them to actually make an informed decision before using a structured warrant. And of course, earlier I mentioned final settlement. How do you actually calculate, or how is it derived, the cash settlement amount? So this announcement will be made over here. This is because at maturity for structured warrant on Bursa Malaysia, it will be cash settled. So this is where the actual payoff will be determined. So this determines how much you will receive for every unit of warrant that you hold. So this provide in detail how the final settlement price is actually calculated. So you don't have to crack your head to figure out how much you will be getting. This is because an announcement needs to be made on the Bursa website. So always remember that for all structured warrants on Bursa Malaysia, it is only settled in cash. So this final settlement calculation that will be announced is actually crucial for you as an investor to understand how much you will actually receive upon expiry if the warrant that you hold expires in the money. All right. And of course, earlier I mentioned as well the announcement of the expiry and maturity of the structured warrants. So this is because every warrant in the market has a defined expiry or maturity date. And after this date, it can no longer be traded. So just a quick reminder as well, if the warrant expiry date is on 30th September, meaning to say 2 days ago, the last trading day is actually T minus 2. So 30th September being the Monday. So T minus 2 would be the 26th September, okay, which is last week, Thursday. So last week, Thursday, 26th, will be the last day that you are able to trade the warrant in the market. And on the 27th September, it will actually be suspended and you can't trade it anymore. And then on the expiry date, it is delisted after that. Okay. So this announcement actually allows investors and also to ensure investor can prepare ahead of time, either by adjusting your positions before the expiry date or even rolling over to another warrant, a similar warrant over the same underlying to ensure your exposure. And number 6 is actually adjustment to the terms of the structured warrants. So occasionally, right, the terms of the structured warrants may be adjusted due to events like I said about Gamuda, right? A bonus issue or rights offering, and also any corporate actions that will affect the share price, okay, in terms of warrants price or conversion terms. So this adjustment to terms announcement actually provides details on how these corporate actions will affect the structured warrants price. So for an issuer, whenever there's a corporate action like this, we actually make adjustment to the exercise price and the exercise ratio if the factor of the difference is more than 2%. Okay. So that's why as an investor, it is also very important to monitor this area to avoid any surprises that could actually impact the value of the warrant holding that you have. And lastly, market making activities. Remember, in the first few slides, I said that market makers have to ensure that they maintain 80% presence in the market. So this is because over here, an announcement will be made if the market maker is unable to fulfill the 80% obligation. So market maker is a critical player or plays a critical role in providing liquidity for the structured warrants that they issue. So when a market maker can't do that or unable to fulfill its obligation, this section, market making activities announcement, actually lists out when are they not able to post their buy and sell prices in the market. All right. So to quickly give a summary of this slide out of the 7 key announcements that I like to point out is this information or this announcement provides you with a wealth of resources to make informed decisions when you want to trade structured warrants, from all the way from the initial offerings to the term sheets to the market making activities and even until the final settlement. This announcement website page by Bursa Malaysia equips investors, retail investors, with the data that they need, that you need to navigate the structured warrants market effectively. So by leveraging these tools, investors can better manage their risks, identify opportunities, and of course, overall enhance their trading strategies. So I'm not sure if most of the attendees here tonight are aware, but let's move on to the main market listing requirement, Chapter 5 for structured warrants, which is some amendments were made earlier this year, 2nd January 2024. And this is because this chapter specifically addresses the type of underlying assets that can be used to issue a structured warrant. So having a clear understanding of what can be issued as a structured warrant is also beneficial to you as an investor. So, of course, number one, the most famous one is the underlying asset being a single equity stock. So this refers to warrants issued on a specific stock listed on the exchange, be it YTL Power, the likes of Sime Darby Property. You have Asia X as well. So structured warrants are issued over single stock, typically also large cap stocks. This is because the value of the structured warrant will move in tandem or in correlation with the performance of the underlying equity or the underlying stock if it's a core warrant. So why is it issued over large cap names or even mid cap names? Is because for retail investors who have a limited amount of capital, they are able to express their view or to participate to gain exposure to the movements of this underlying stock at a fraction of a price. And investors typically choose single equity structured warrants to capitalize in short-term movements in specific stocks that they are either bullish or bearish on. Okay. And the second one is actually exchange traded fund. We do have some exchange traded fund listed in the market. This is because for exchange traded fund, you can think of it is that the ETF is a pooled investment vehicle that either track a particular index, sector, or even asset classes. So there are some demands in the market for ETF warrants because ETF warrants offer exposure to a broader range of assets within a single product, right? So instead of buying multiple single stock warrants, you can consider ETF warrant. So this provides you a better way of gaining leverage or to hedge, meaning to say to protect your portfolio against movements in broader market trends or even specific sectors. And of course, lately, I think everyone is aware that the index, specifically Hang Seng Index warrants are very actively traded in the market. And this is obviously another popular underlying asset. So structured warrants on over indices allows investors to hedge or to express their bullishness on the performance of the entire market, right? So we have the FBM KLCI in the market, the Hang Seng Index, the Nikkei, the US ones as well. So the warrant can be based on the local index or even foreign index. So it is a very capital efficient way for investors to deploy its capital to gain exposure to a local index such as the KLCI or even the Hang Seng Index lately after they announced a major stimulus, right, to spur the economy. Hang Seng Index has been closing in the green for the couple of days back. So you are able to gain exposure to the companies or the constituents within the index at a fraction of a price rather than replicating it using individual stocks. So index warrants are very appealing, right, to those who want to express their view on the broader market movements rather than a stock-specific outcomes. So an event-driven sort of movement, such as the announcement of the big stimulus in China and Hong Kong, may be a great use case of considering the Hang Seng Index as a tool, the Hang Seng Index warrant as a tool to complement your portfolio. Okay. And something that is not common, not so common, I would say, is actually a basket of equities, right? Structured warrants can also actually be issued over a basket of equities. It could be over a basket of local banks, a basket over the semiconductor players in Malaysia. So this is actually a combination of different stocks, different companies grouped together as one singular underlying asset. So this provides investors with some diversification benefits, as the performance of the warrant will be tied to the combined performance of multiple stocks rather than just one. So baskets are also typically constructed around specific themes, sectors, or even regions, which allow investors to express views on broader trends without the risk tied to a single stock. So for ETF, index, and basket of equities, the idea of issuing over these three underlying reference assets is to allow investors to express to the broader market. All right. And of course, lastly, the new one that I'm also pretty excited about is actually the commodities as the underlying for structured warrants. So as of this year, 2024, commodities have actually been added as a new type of underlying asset for structured warrants. So this actually opens up the possibility for structured warrants to be issued over key commodities like gold, oil, crude palm oil, and this gives investors exposure to price movements in the global commodity markets. And there is always the hard commodity and the soft commodity. So the hard commodity over here is basically commodity that has to be extracted from earth, from ground, whereas the soft commodity are more plant-based, your soil, your crude palm oil, and those kind of stuff. So instead of now just being equity only or index only, there is a potential for gaining exposure to these commodities asset classes at a fraction of a price by just using structured warrants. So for investors here tonight with us who do not have a futures account to trade crude palm oil even, you can wait for us to issue the crude palm oil warrants soon in the market, hopefully, and you'll be able to trade the performance of this crude palm oil price movements by just using your CDS account. So the inclusion of this commodity as a new underlying asset class actually, it reflects the growing demand for alternative asset classes in the structured warrants market. And this obviously offers investors additional diversification opportunities. So in summary, the chapter 5 over here of the main market listing requirement, it introduces you the underlying assets that are applicable or available to be listed for structured warrants. And whether investors are looking for single stocks, ETF, commodities, structured warrants actually offers you a flexible option to express your market view or even over the company, or even as a tool to manage risk. So the diversity here in the underlying assets expands your opportunity for you in the structured warrants in the market. This because you are able to ensure that the different investment objective for your portfolio can be met. And also, just for your information, currently in the structured warrants market, there are warrants issued over the FBM KLCI index, Malaysian stocks, the Hang Seng Index, Hang Seng Tech, Hong Kong shares, iShares A50 ETF, the Gold Trust, Nikkei Stock Average, and of course the three major US indices, which are your S&P 500, your Dow Jones, and of course your Nasdaq. All right. So in this slide here, I would like to just highlight what was the most actively traded single equity underlying in the structured warrants market. Okay, so bear in mind that this is single equity only, so it's just single stock warrants for the month of August 2024. So you will see that these stocks here represents a mix of local and international companies across different industries. So providing you as an investor with a diverse range of opportunities. And what you see here is in no particular order except alphabetical. And of course, we have number one, Alibaba. As we all know, Alibaba is actually a tech giant in the e-commerce and cloud computing space. And Alibaba continues to be a popular choice in the structured warrants market these days because the investors are looking to capitalize on the volatility in the Chinese market. And if I'm not mistaken, Alibaba has closed above 100 Hong Kong dollars already, and it has been on a bullish trajectory. And the other two I would like to highlight over here is actually Gamuda and IJM, because these two Malaysian construction firms are very popular. Okay, and this reflects the interest of the market in the nation's infrastructure growth, and also not forgetting to mention Meituan, which is a China leading e-commerce platform as well. Okay, so these stocks actually illustrate the mix between the global and local market forces that traders can actually capitalize on aligning with the different economic narratives, right?
Tucker,
Yes, Shane.
just want to chip in. Did you make changes to your microphone setting? Because the sounds, your voice sounds a little bit different.
Just give me a moment, yeah. Is it better now?
Still the same.
Okay, wait. Probably let me drink a little bit of water.
So I don't know what
Okay.
happened, but it's okay. We
How
can
about
still hear you. Just like it sound, you sounded a little bit different, like having an echo or something like that.
echo? I see. How about now? Is this okay?
Yeah, it is still the same. It is still the same.
Oh, still the same. Okay, I think
Yeah.
it's something with the mic then.
Yeah. Rina say you sound robotic.
Okay, is this better now?
Yes, yes. Now back to normal.
Okay, great.
Return to a human body.
This is it was a technical glitch. Okay, thank you, Shane. Okay, so apart from actually looking at the commonly traded or the top traded single stock, right? We also want to see what is the outstanding warrants, okay? And this slide actually presents the top 20 single stock outstanding warrants currently in the market, which is year to date. So this is actually from January to August because the September numbers are not out yet. And these warrants are linked to equities that showed significant trading activity and investor interest. So I believe some of you may be asking, what is outstanding warrant, or what does it mean by outstanding warrant? So for example, every issuer is actually required to publish a report after every month end on the inventory of their issued warrant. So the title of the announcement that you can find on the Bursa Malaysia Structured Warrants Announcement website is actually, bear with me, announcement pursuant to paragraph 5.35 sub 4 and 5.35 sub 5 of the main market listing requirements of Bursa Malaysia Securities Berhad. So outstanding here means the number of structured warrants not held by issuer. So say, for example, we have an inventory of 100 million. And if in the report, the outstanding shows 80 million. So what this means is that the market, the retail investors in the market are holding the 80 million units and not the issuer. So if you think about it from a different perspective, is that this warrant is heavily sold. Okay, so it's just good to have information for investors with us here tonight. All right. And within the month-end report as well, you'll be able to find the quantity of structured warrants being bought and sold by the issuer, alongside with its buy VWAP and also the sell price VWAP. All right. So the table is here, and you can see that we have companies such as Armada, CMSB, Gamuda, and IJM once again, Genting, IOI, PG, Kosan, Maiji, and if you notice, Suncon is inside there as well, right? Suncon, I believe it was quite a sideways stock until recently, whereby they announced their data centers, or even their building, the contracts that they have to build data centers, right? So understanding these top outstanding warrants allows investors to make a better informed decisions on actually, what warrant out there in the market are being heavily traded and actually being held. and not held by the investors. Okay, so these are just some data for you. These are all up to August 2024. So now we've come to the third part of the session, which is actually how do you select a structured warrant? So when it comes to selecting the right structured warrant, you can have a systematic approach to ensure that your goal is aligned to your choices with your trading strategies and of course the market condition. So let's just go through quickly the 5 key steps which I've laid out involved in this process. Number 1, you actually will have ideation. So it's forming a trading idea. So this is, you start by developing a clear trading idea based on market analysis, sector trends, or even economic data or economic indicators. So this initial phase, this step 1 sets the foundation for your entire trading strategy. So this is because whenever you want to enter into a trade, what is your view fundamentally or technically, right? And of course, with structured warrants, you have to pick a direction, right? With the availability of the put warrants and the call warrants, you need to pick a direction. So determining the direction in which you feel the underlying asset will move upward or downward, this view will actually guide your selection of the call or the put warrants. And of course, in this slide or in this segment, I will be talking more about how to select. So the third step is actually how do you select the right warrant? So the focus here is to actually to choose the appropriate structured warrant based on the criteria which I like to refer as SET. So ready, set, go. So SET, S-E-T. So SET here actually stands for sensitivity, effective gearing, and time to maturity, or some may even refer it to as time value. And also other key factors that you should consider apart from the SET is, of course, exercise price, expiry date, and of course, implied volatility that should and can be taken into account. Okay, so this is to ensure that the selected warrant or the warrant that you're screening for aligns with your risk tolerance and investment goals. This is because right now there are more than 1,000 structured warrants in the market, and each structured warrant has specific characteristics that can actually influence your investment outcome. So it's good to familiarize yourself with the terms such as exercise price, expiry date, call or put warrants, and also SET. Okay. And of course, when it comes to implied volatility, right, before we go to observation, implied volatility is essentially the market view of the underlying of how volatile it can get. So this is because with a warrant that is higher in implied volatility, it can lead to larger price swings, which will affect and impact the warrant's value. So selecting a warrant with appropriate implied volatility, or IV, commonly referred to, is crucial to your strategy. So how do you think of IV is actually, you can think of IV as a price to earnings ratio when comparing peer companies. So by utilizing IV, that number, say for example, you're considering the warrant for 99 Speedmart, right? 99 Speedmart just recently IPO, and there has been a lot of market activity for 99 Speedmart warrants. So when you look at 99 Speedmart warrants out there in the market, when you want to compare which one is cheaper, right? Same as how you want to compare companies within the same industry, the peers, which one is cheaper? You look at the PE, right? The price to earnings ratio. So similarly, when it comes to structured warrants, the PE equivalent is actually the implied volatility. So it's not a hard and fast rule, right? But the rule of thumb is essentially the higher the implied volatility, the more expensive the warrant is. It may not be in terms of the price or the absolute value, and the lower the implied volatility means it is cheaper. Okay, so this, when choosing implied volatility, it ensures that the warrant aligns with your risk profile, because higher implied volatility can lead to larger price swings, right? So you need to consider how much you are willing to risk and the potential rewards, because the leverage effect of the warrant can also affect your risk exposure. Okay. And number four, the second last step is actually observation, which is to monitor or monitoring the warrants that you hold. So once you've actually selected a warrant, why I say observation here is because you have to continuously monitor its performance and the market conditions. This is because when for example, you purchased a call warrant over a certain company and suddenly they made a negative news announcement, this will affect your value of the warrant significantly. Okay. So by staying informed about any news or developments related to the underlying asset is very important, because it will either positively affect the value of your warrant, which is good news, but if it negatively affects the value of your warrant, then that's not so great news, right? So for Maybank IB, we actually do have a Telegram channel where we post news, our research article, our research report as well. And I believe other issuers out there in the market do the same as well. And why you need to be informed of all these news and developments is because when the warrant, okay, so the warrant is actually a double-edged sword. As fast as it can go up, it can come down as fast as well. Okay. And another thing that I would like to bring to your attention is that monitoring the warrant is actually very crucial, because if the share price remains sideways or remains the same, your warrant will lose a tick in its value over time. And this is because of time decay. So it is very important to remember that structured warrants are a financial instrument tool that is meant to be traded and not held. I think I said the same thing in the previous webinar as well. So remember, trade it, don't hold it, okay? And lastly, accumulation. So you want to accumulate profits along the way. And for example, given that the performance of Hang Seng Index is so well, okay, today, you may see that some of the Hang Seng Index warrant actually gain, 200% within a single day. So why not take profit, right? Why not accumulate profits along the way? Because if you are able to, generate a return on investment 200% a day, you would be the world best trader already. So this is why, even though you may witness that the upside is, unlimited, it can be 200% within a single day due to, the underlying asset being a Hang Seng Index, but the same can be said on the downside as well. So don't be too blurred by the fact that it is unlimited upside, because one key thing when it comes to trading warrants is actually to consider strategies for profit taking when the warrant moves in your favor. So whether is it, partial sales, selling just a portion of it while maintaining the rest, or, putting your target prices, your stop losses, accumulating profits along the way actually helps you to manage risk. Okay. And risk here is that you're risking your money. So accumulating profits actually, in essence, manages risk. And this helps you to secure your gains. So in summary, over here, in conclusion, by following these 5 steps of ideation, direction, selection, observation, and accumulation, retail investors, even novice, beginners, or even seasoned, can actually navigate the structured warrants market more effectively and enhance their probability of trading success. So I mentioned that there is something called call and put. So for those who are not aware how a call and put is determined, is, say, for example, the underlying share here is Bursa. And if you see that there's a dash after Bursa, what this means is for the warrant type. So dash CA stands for a call warrant, whereas dash HA is a put warrant. But some of you may notice that right now in the market, there are some Hang Seng Index that is actually starting with dash CWAA, CWAB, CWAC, and so on. And also there is PWAB, PWBB, so on and so forth. So the CW there actually stands for call warrant, whereas the PW stands for put warrant. So how do you differentiate, a call or a put warrant is through the code. But what is a call warrant and a put warrant? So a very academic definition is basically structured warrants, by buying structured warrants, grant you as the holder, because you're the buyer, right? Grants you, the holder, the right, but not the obligation to buy if you're using a call warrant, or sell if you bought a put warrant, the underlying asset at a predetermined price, which is the exercise price or the strike price in the future, which is the expiry date. So simply put, the call warrant is the right to buy. So when do you utilize a call warrant is that if your view over the underlying asset is bullish, you use a call warrant to buy because it gives you the right to buy, and the call warrant value or performance will move in tandem with the underlying asset. Whereas for the put warrant, it is the right to sell. So it moves inverse. So what this means is that when the underlying asset price drops, the put warrant value will go up. So typically, put warrant is used as a hedging tool. If you are, heavy on a single underlying stock, you may consider a put warrant to hedge off any potential downside risk. Okay. So I said for this part, I'll be focusing on selecting a structured warrant. And over here in this slide, you'll be able to see that this is actually a screenshot from the Maybank Warrants website. And over here, this is actually our warrant search page. You'll be able to see all 99 Speedmart listed call warrant here in the market. Okay. And why is there two red boxes, growing and expanding, shrinking? Because I want to bring your attention to number one on the left, which is the expiry date. And of course, the indicators, which are your sensitivity, effective gearing, and implied volatility. So remember earlier I mentioned that implied volatility is like a PE ratio when comparing structured warrants. So when you're comparing between so many 99 Speedmart out there in the market, you may look at implied volatility as a PE for that reason. But the three main things I want to bring to attention is basically the SET, which is your sensitivity, effective gearing, and your expiry date, or also known as time to maturity. Okay. So this is because why SET is that number one, sensitivity tells you how fast the warrant will move. So without the live matrix tool, you would have to calculate in your head arithmetically if a warrant is 2 tick sensitivity, it means every 2 cents. That's quite straightforward. But what if the warrant has a sensitivity ticks of 15, 18, 20, right? Then it's not that straightforward. So a live matrix is a tool provided by the issuers in the market to show the responsiveness of the warrant price relative to the underlying share price. Whereas for effective gearing, it basically tells you how much a warrant will move for every 1% change in the underlying price. So effective gearing, which is higher, say for example, 5 times here, that means that for every 1% move in the underlying share price, the warrant will move by 5%. And if you notice, I didn't mention whether moving up or down. This is because warrants is a double-edged sword. As fast as it can go up, it will come down as fast as well. So effective gearing basically is asking a question, how much risk are you prepared to take? Because if it's a 10 times effective gearing, for every 1% move up, you stand to gain 10%. But for every 1% move down, you stand to lose 10%. So it's between sensitivity and effective gearing. If you ask me, it is quite a balancing act. And if you are an intraday trader, you are looking to open the position at 9:01 a.m. and you are planning to close at 4:40 p.m. You want to look at something that's more sensitive, lower number in terms of ticks. Whereas if you are a trader who wants exponential or big percentage returns, then you may have to find a warrant that has a little bit higher of effective gearing. So maybe in the next webinar, if I have the chance, I can go through how some of this sensitivity and effective gearing is calculated. And of course, lastly is time value or time to maturity. So this time value or time to maturity basically tells you how long the warrant lasts. Because, just like bread, there's an expiry date, warrants has a finite life as well. Okay. So longer dated and newly listed warrants has more time value, because as simple as if a warrant is issued today and is expiring next year, July, buying it now, you have more time between now to expiry. So this essentially gives you the time value. And this time value, it is in all options, whether is it in the US, in Hong Kong, or in Thailand. It is in all options, in all form of options. So very important that you need to know what is your investment timeline, because I have received call as well that an investor wanted to buy a warrant that is due to expire within a month. And especially when the warrant is close to 3 months, 2 months, and 1 month to expiry, you will see that the time value or the time decay will accelerate over time, closer and closer to the expiry date. So knowing your investment timeline, hence the first step is ideation, knowing the underlying, the sector, what is your view, how long it is. Okay. And of course, earlier I said implied volatility is like a PE ratio comparison for peer companies. So over here, I've set out a table, which is, for example, 99 Speedmart CXX, for example. And within this table, we have several key data, which is number one, the underlying stock price, which is very important to determine the moneyness based on the exercise price, which is 2.29 here. So when the underlying stock price is lower than the exercise price, this warrant is deemed out of the money. This is because for a call warrant, it is out of the money when the share price is here, but your exercise price is higher. So it's cheaper to buy from the market, right? And then we have an exercise ratio of 2.5, time to expiration, which is 218 days. And bear in mind is that for time to maturity or time to expiration, it takes into account weekends as well. So don't forget that it's not just market days, it's also weekend. And over here is a risk-free rate of 3%. And here, the one that is highlighted in red, which is actually the implied volatility. Okay, so this table here basically uses Black-Scholes model to calculate what the warrant price would be. And
Tucker, we are losing you.
used to calculate the option price, right? And it's derived, it is the number of standard deviations in the underlying price from the strike price adjusted for the time value of money. Okay.
Tucker, I think we just
Yes,
lost you for about that 20 seconds or so just now.
20
when you were-
seconds.
Yeah, I think just now.
Okay.
Maybe you can
Where did we
repeat.
lost me? Volatility?
Yeah, yes. When you talk about
Okay, okay.
the one in red color, okay, implied volt. Then
Okay,
suddenly
great.
you were frozen.
Again. Okay, no worries. So I'll start back from volatility again, right? Is it okay?
Yes, yes.
Okay, so I think let's just quickly go through the differences between the two. So the volatility here is 0.341, and we have D1 and D2. So D1 actually reflects the number of standard deviations of the underlying price from the strike price. Okay, and this is adjusted for time value of money, and it plays a critical role of determining the option or the warrants delta and the overall price. Whereas D2, just like D1, it helps in determining the options price by representing the likelihood of the option expiring in the money. Okay, so the attention is to the red color. So volatility here is 0.341. After you plonk all these numbers from exercise price, exercise ratio, time to expiration, risk-free rate, volatility, you will arrive at this number, which is the structured warrants price of 0.115951. So this is the, sorry. Okay. So this is actually the value of one full warrant. Okay. So some always ask, why is there exercise ratio for warrant? This is because this is to cheapen the warrant price per unit. So in this case, essentially, if the warrant is being sold at 34.1% implied volatility, the price per unit is actually 4 cents or 4.6 cents in this case. But in the market, the tick sizes for warrant is half a tick. So this would be 0.045 or 0.05, okay? And then based on the numbers that is from the Black-Scholes, you'll be able to calculate your gearing, effective gearing, and your sensitivity. And the sensitivity here is expressed in cents. And because the underlying share is between 1 to 9.9 in ringgit, so it moves every 1 cent. So essentially, it is 3.4 ticks, right? So we have seen what if the warrant is being sold at an implied volatility of 34.1%. So now, what happens if it's another warrant with the same specs, the same underlying share price, the same exercise price, ratio, and time to maturity, and is being sold at 54.1% volatility? You will see that the structured warrant price per unit becomes way more expensive at 9.4 cents, or if it's priced or being queued in the market, it will be 9.5 or maybe 10 cents, right? And you will see that it is almost close to double of the 34.1% implied volatility. So what I'm trying to get to here is implied volatility, it is used as a PE ratio comparison in terms of price. And because of the implied volatility, you'll be able to see that the effective gearing and the sensitivity profile of the warrant will also be different. Okay. So when you compare, I would say you start by screening the sensitivity, the effective gearing, to the time to maturity. And when you have narrowed down to maybe 3, which are similar warrant profile that you like to trade using, then you can compare using the implied volatility. Okay. And once you have compared using the sensitivity, effective gearing, and implied volatility, then it is time for us to look at this. Okay. So this is a screenshot a few days ago for 99 Speedmart. And then when you want to look at the liquidity, right, you want to look at the buying quantity, the selling quantity, okay, and not just the traded volume. Because traded volume, yes, it means that the retail investors, the market is participating using this warrant. But for liquidity providing, as a market maker, which warrant is able to provide good liquidity would be looking at the bid and the ask, okay? And not purely just from the traded volume. So the bid and the ask volume will take precedence before the traded volume, all right? So moving to the next slide is how to maximize the live matrix, okay? So I don't know if the gray and the white color here is obvious enough, but let me just try to see. Okay. Can you see? I believe my laser is out, right? So on the left, we have YTL C82, and on the right, we have YTL C92. And quickly put is that for every gray line, okay, it is essentially the sensitivity of the warrant. So over here, you'll see that from 2.73, 74, 75, 76, YTL C82 will move to the next bid and ask. So the sensitivity ticks here is about 3.8 ticks, right? Whereas for YTL C92, it is 1, 2, 3, 4, 5, 6, 7. So it's roughly 7.9 ticks, 7 ticks, okay? So when you look between these two warrants, you know, which one do you pick? Do you pick something that is, you know, low in sensitivity ticks or high in sensitivity ticks, okay? So one strategy that you can potentially use is that, say for example, you know that this underlying share price right now is at 2.72, 2.73, and it is at the bottom of this matrix, which means 6 and 6.5 is at the bottom level already, right? You can potentially put your buy order for 6 cents if the intraday of YTL is between 2.69 to 2.74, right? Because share price movement will move, right? And when the share price drops to 2.7 to 2.71, you'll be able to buy at 6 cents. And if the rest of the day, the share price moves up to 2.74, 2.75, you are safe in this sense because you'll be able to sell back at 6 cents, right? And let's move to something that is less responsive, which is YTLC 92. So here we are also quite close to the bottom of the matrix, and the bid and the ask is 3.5 and 4 cents. So here also the same thing. If you expect the share price to go to 2.7, 2.71, 2.7, 2.71, you can buy at 3.5 ticks, and then the next flip up, you are safe at 3.5. But here, right, between here and between here, you are quite safe from 2.71 all the way to 2.63 because you'll be able to sell at 3 cents for 1, 2, 3, 4, 5, 6, 7, 8 ticks, right? As compared to if you were to use C82, if it drops to 2.63, it will be 4.5 already. So you would have bought at 6 cents, and then because the sensitivity is very high, it's very responsive, so you will immediately 1, 2, 3, 4, 5, 6, 7, 8. So you would have to sell back at 4.5 cents. So this is a very quick way of utilizing live matrix to look at sensitivity. Okay. So my time is almost running out, but there are a few tools at your disposal that I want to bring your attention to, or at least the screenshot of the website is number one. Of course, we have our Maybank Warrants website, and over here, you can actually customize 6 widgets on the homepage, and it's actually safe according to your settings. So you don't have to, go in and reset it again and again and again. And of course, over here, we have our main banner, which also tells you our campaigns that we're running and also the new listing. And of course, we have Bursa Malaysia Marketplace, where you have things like Burmont Trader is like a simulation game. You have a mirror, learn and trade. You have the screener, stock rating, and even access to research reports that you are unable to retrieve, perhaps is not available by your broking or your participating organization. And of course, we have the Bursa Academy, where over here is all your resources. And if you actually go to Knowledge Center, you will be able to get access to books and the Economist magazine as well. Okay. And I guess this is time for Q&A session. We have about 10 minutes left until 10 p.m. Right, Shane?
Yes, that's right. So thanks, Tucker, for doing this session for us. So if you have any question to ask our speaker today, please write your questions at the Q&A box. Not the chat box, yeah? Write them at the Q&A box. So the first question I see on my screen is by Benji, all right? So does Maybank provide live matrix?
Yes, Benji, yes. Is it okay if I share my screen again?
Sure.
Okay. Just give me a moment. Let me stop share. Okay. So, okay, great. So thank you for the question, Benji, and I hope everyone can see my screen. So this is actually our Warrants website, and since you're asking about the live matrix, there's a handy tool here, which is you can actually set a live matrix here, which is like a quick access to your live matrix. And for example, if you want to look at 99 Speed Mart, right? You can search 99 Speed Mart, you can choose between CA, CB, and immediately the matrix will pop up over there. Or if not, you'll be able to go to under Warrant Tools, Live Matrix. You can set up to 9 live matrix at once. Okay. So apart from that, is also a search engine, not just for Maybank warrants, but also other issuers. So it's a handy tool for you to compare between warrants as well, right? Hope that answers the question, Benji.
Thanks, Tucker. The next question is by Lim. So just now, I think you flashed out a slide on my 99 speed mart, the warrants. So the question here is, how come this CL has an implied volatility of 0%?
I see. Okay. So that's a good question as well. So let's look at 99 speed mart. Let's take all issuers and let's see CL. So CL is issued by another issuer. So I'm not sure where do you see the zero, but because
I think
for
from your slide.
Oh, zero. I see.
Yes.
Okay. So that screenshot was actually taken prior to market open. So a lot of the implied vols was actually not updated. And because as an issuer, we would not have the implied or the selling volatility of another issuer. So the numbers that you see here are actually back calculated based on the warrants price. So hence, sometimes you may notice there are some warrants, if you were to screen, even for example, right now, you will be seeing implied volatility with zero. Sorry. Or underlying.
So in other words, it's not updated yet, because market is
Yes,
closed.
correct,
Okay.
correct.
So when the market is open, we won't see zero.
Yeah, but there are some instances where if the warrant is about to expire or if it's very out of the money, then you will see that some implied volatility for the warrant is actually zero in this case.
All right. So just now, Tucker, you mentioned that implied volatility is like the PE ratio, the valuation for the structured warrants. So the question here is, how come how did the issuer decide what implied vol to use, right? And how come it differs from each other?
Okay, so actually there's no clear-cut answer in this because every issuers have different risk management or sort of risk appetite style. So depending on what is the trader or the issuer's view on the certain underlying, they are willing to take more risk because for implied volatility, selling higher doesn't mean that that the issuer makes more, but it also means that the issuer is taking up more risk, right? Because the implied vol is higher, it's more susceptible if there is a very sharp swing in price, whether up or down. As an issuer, it will be risky as well. So different issue houses may have different trading strategies as well. Hence, there are differences in implied volatility. And as for how is it being determined, I can't disclose that, but depending on the risk management, the risk appetite, and the trading strategy of each issuer, the implied volatility is then derived from there, right?
So the implied volatility changes from time to time, right? Depending on the market condition and depending on the issuer, whether they want to adjust that, to adapt to the market condition. Am I right?
Yes. So different issuers out there may have different styles, different practices. Some may adjust the volatility depending on the market condition. Some may not. So it is good. That's why I say in the fourth step is to actually observe, because when market turns, whether is it for up or for down, volatility will change. Because if you think about it, volatility here, it's directionless. Whether it's share price goes up or share price goes down, volatility will spike as well. But most predominantly, volatility spikes when there is a negative movement. And we can always look at, the VIX in the US, the volatility index. Volatility index in the US VIX always spikes when there is a negative movement in the market.
So do issuers need to file any changes in the implied vol with the Bursa Malaysia?
From our understanding, no, there is no announcement to be made for implied volatility because this is part of the whole risk management, right? The whole risk management of the issuers. And so there won't be an announcement in this case.
All right. So the next question is by Tan, is that where can we see all warrants by all issuer in one table accurately for us to select the right warrant?
Okay, that's a good question actually. So like right now, I've selected all the issuers over here. Yep, all the issuers. And you can see that there's about 1,107 found. And this only includes Hong Kong shares, local shares, FBM KLCI, and the Hang Seng Index. So from here, you can actually sort based on alphabetical order, for example. Just the moment it's loading. And if you really want to take it a step further, rather than just screening on the website over here like this, right? Where you see Maybank warrants first and then the other issuers one, you can actually consider using the warrants website as a tool to actually export it as an Excel file, and you can screen it from there on, right? So for you to actually deep dive into each warrant and to actually really choose and select which warrant that you want.
Right. Thanks, Tucker. So the next question is by Maslan. Just now you mentioned about Vermont Trader. So the question here is it a simulating tool for warrants?
Okay, let's just quickly go ahead to Vermont Trader. Oh, sorry. Sorry. So I think this one isn't exactly like a warrant trader per se, but it essentially tells you how does a market would react, right? It will, how will the prices be moving? And sorry, it's not loading. But okay, essentially, this basically teach you the game of trading in a very layman way or in a very gamified way. So, whenever there's a lot of demand for a certain item, the price will go up. Or if a lot of people are selling certain item, the price will go down. So very interesting enough that you can see even the monthly leaderboard, faction leaderboard, and all this stuff. So if you are a student in the webinar here tonight, Vermont Trader may be a good way for you to find out more about how trading works, right? From a very gamified way.
All right. Let's do one last question since we are running out of time. So what exactly is VWAP?
VWAP. Okay, that is a very good question. So for example, VWAP, let me just bring your attention to here. Market information, structured warrants. Okay, so this is how you get to the structured warrants announcement page, and let it quickly load. So here, okay, before we go to the VWAP, so this is the long title I mentioned just now, which is announcement pursuant to paragraphs 5.35 sub 4 and 5.35 sub 5 of the main market listing requirements of Bursa Malaysia Securities Berhad. So this title announcement basically will tell you or show you the Excel file of all issuers outstanding warrants and the prices that they have bought and sold and the units as well. And let's just quickly find a cash settlement. Okay, maybe I find a term sheet. Okay. 19.9. So here is actually the term sheet of Maybank IB issued warrants. And then if you were to find volume weighted average price. So VWAP is actually the volume weighted average price. And why volume weighted average price is because when you find for cash settlement, the cash settlement amount is based on the settlement price, and the definition of settlement price is actually here. So the arithmetic mean of VWAP of 99 smart shares for the 5 market days prior to and including the market day before the expiry date. So right off the bat, it may be quite complicated to understand, but let me just simplify it for you a bit. Is that, for example, for the warrant that is expiring on 30th September, right? The last trading day is 26, correct? So 27 is the day prior to the market day before expiry. So 30th is the last day, which is the expiry day. So 27 is the day before expiry. So we will observe 5 days being 27, 26, 24, 20, 25, 24, and 23. So that's Monday to Friday. So the VWAP here essentially tells you, for example, 99 Speed Mart, the share price for the day moved between 2 ringgit to 2 ringgit and 5 cents. Okay, so how VWAP is calculated is essentially 2 ringgit times the volume done 2 ringgit and 1 cent times the volume done, 2 ringgit 3 cents times the volume, so on and so forth until 2 ringgit and 5 cents volume done. And then from there, the average of it. So that's how you arrive at the volume weighted average price. So some issuers may just take the average closing price. Some will take VWAP prices. So it really depends on the warrant that you purchase and who is the issuer for the warrant.
All right. Thanks, Tucker. So that's all the time we have for Q&A with Tucker. So thank you so much, Tucker, for sharing with us on this structural warrants topic. So guess that most of us here would have gained an enormous value and understanding about what structural warrants are and how we can use it to complement our portfolio. All right. So ladies and gentlemen, you just listened to the senior analyst of Maybank Investment Bank, who is Mr. Tucker Cheah. Thank you so much, Tucker.
Thank you very much, Shane.